Hey guys, how's it going? So I want to talk about a company that I'm invested into. They had some really awesome news and that they're destroying. They're destroying Disney in India. That is pretty crazy. I'm gonna play a little bit of a clip of the CEO talking, and then I'm going to go into the press release that this was on April 9th, 2021. Remember that was on April 9th, 2021. This is on the Qyou media, and I'm gonna play the video and then I'm going to talk more about it right after. So let's begin.
Those ratings. So this, but with all that said, this is nothing short of extraordinary.
Yeah.
I mean, I've gotten a lot of calls from, people already in India going, dude, how did what is going on here? Because it's a rocket ship ride right now.
Yeah. Well, incredible. And I mean, tell me if I'm emphasizing the wrong stuff, but 13 compared to, Disney at 5.6, MTV at a 6, Zoom at a 5.4. And then the other number I look at is, of course, your year-to-year growth. I mean, Kurt, you've done something crazy here. 13%, 13,000%, sorry, growth in a year. That's crazy. And I mean, time spent viewing pretty much double everybody else's. And then obviously impressions are basically double everybody else's. So wow, incredible growth. I know we talk about ratings a lot, even though we don't like to in some cases, but holy shit.
Look, it's a pretty simple formula, really. At the end of the day, ratings equals revenue.
Yeah.
Period. Kind of full stop. Full stop. Ratings equal revenue. Now, the big media companies can leverage lots of different ways of dealing with that because they're aggregating and combining stuff and doing things and having brands sell across higher rated channels, lower rated channels. We don't have the advantage of that yet in our current iteration. But the fact of the matter is you get ratings, you get higher ad value, period, because more people are watching it. It's kind of simple math. And so this is putting us in a position where, and I've said this before, I hope that if we hold and keep staying where we are, and who knows, maybe get lucky and grow a bit more, if we're really friggin', getting the kind of growth spurt that we're feeling the energy behind right now and can maintain that. I mean, this can get to be very, very big numbers and real stuff, especially compared to where we've been. And so the bottom line is that this rating, I mean, our sales staff is out right now selling. Look, 13. As I said, people will look to that and say, can you hold it? Can you stay there? Can you, because these other companies, I mean, when you talk about Bindos, I think Bindos launched in 2007. It's been around for 14 years. MTV launched in the early 2000s in India. It's been around in India for 20 years. Zoom is owned by Times of India Group, which is the company that just invested into us. They're the largest media company in India. So we're not like the little unseen thing that nobody knows about now. We've entered a whole nother phase now. That's why I say we're in the third inning. Now everybody knows who we are. Trust me, they all know who we are now. It's not like, what's that little Qyou?
Okay, I'm not gonna play any more of the video. If you want to do your own research and you want to watch this whole clip, you can go and join the U Media YouTube channel. I subscribed already. They have about 785 subscribers. But remember how they were talking about, 13 was so awesome. And then next week, just literally next week, they went and they posted 56% growth, reaching 46.3 gross rating points. Literally destroying Disney, Viacom, and the Times of India is beginning to move either past or towards mainstream mass channel, including Big Mac, Zoe, Color. Yeah, so they're destroying Disney, they're destroying Viacom, they're just dominating in India. And you know, just look at this rating. Look at that. It's like 4.4 April, 13.2 April 16, 46.3. What? What? Like seriously, that is crazy. And we all know that ratings is so important to channels, right? So even if this thing fell back to like 30 next week or whatever, it's still really high. That rating is really high. But sometimes it could go even higher than this. So next week we can see this thing go to 60, 70, 80. I don't know at the end of the day, but I'm thinking I'm putting even more money into this company. But this is just me. I don't know about you. This is just me. I'm thinking of putting more money into this company because I feel like at $100 million market cap, it's extremely undervalued when they're competing with giants like Disney. And you know, and what happened if they expand out of India, right? India's huge market, 100 million homes already, and they're probably gonna, since this rating is going higher, I mean, they're gonna expand to more homes. When you get this kind of rating, people talk about you. People will spread the word, and more people will check you out, and the ratings will go higher and higher and higher, and more and more more and more ad companies are going to flock to Qyou, and Qyou's revenue is gonna skyrocket. They're gonna make so much money in such a short amount of time because of their rating. You know, very undervalued company. So I mean, the stock right now is trading at 31 cents. They have a market cap of 112 million. They've had a high of 48 cents. I think they're going to break that. I think the stock's going to $1 here in the very short term. I'm definitely going to be buying more shares on Monday. But that's just me. You guys can do whatever you want. Not financial advice. Stock markets are crazy, and you know, and let's just look at their competitor. I don't know what happened to Viacom, but they were $100 stock, and then they just crashed real hard, and now they're trading at $39. I don't know what happened here. This could be an opportunity. If you believe in this company, definitely do your research. And then we look at Disney. They are $339.93 billion company, and you know, and they're destroying Disney. They're not even just they're not even just beating them, they're destroying Disney. Like, Disney is like an ant compared to this company, and this company has a $100 million market cap. So they must have some awesome content. You media must have some awesome content in order to destroy Disney and all these giant companies like Viacom. So very strong. I think this stock will make you a lot of money if you buy into it. My opinion only, not financial advice. Yahoo Finance gives a 1 year target estimate of $1.10. I think he's gonna hit that. I could be wrong. Pure speculation on my part. We'll see what happens. They are quite dilutive, but at $1, they're about worth 355 million Canadian, about 300 US. So we'll see what happens. But I think it's gonna go to $1 here sometime this month, my opinion only. Anyways, thanks for watching, guys. I hope you enjoyed this. Subscribe. Wow, I only got like 30 seconds. Let's see what the conversations has to say. So $1.20 by Xmas Present. I bet the Qyou has already signed more ad revenue over the weekend. This channel is hot. What a great time to be holding shares of Qyou. Enjoyed the ride, everyone. Great news. Qyou is killing competition. Let's see these skyrocket off. Interesting. Very interesting. We'll see what happens. I'm very bullish on this company. I think it's going to go higher, but we'll see what happens. From a charting perspective, it looks very bullish, but that's just my opinion. Anyways, thanks for watching. Subscribe for future updates and have a great day. Bye.